Welcome. In this episode, we will discuss developments related to several companies in the U.S. stock market and review important data and opinions about their performance and valuation. The information presented here reflects analysis and opinions about publicly available data and should not be considered investment advice. Every investor should conduct their own research and evaluate investments according to their financial situation, risk tolerance, financial goals, and future expectations before making any decision. Boston Scientific experienced a significant decline from its peak. Over the past year, the stock dropped about 24% from its highest level. The company had been rising steadily since 2022, which makes this drop notable. When examining the fundamentals, annual revenue continues to grow, and net income on a year-over-year basis appears healthy. However, cash flow declined significantly during the fourth quarter, which raises questions about the company's financial dynamics. One possible explanation is increased capital expenditures, but the financial statements show a major rise in debt. Total debt reached approximately $11.46 billion. When comparing this to EBITDA of about $3.7 billion, the debt-to-EBITDA ratio approaches roughly 3 times. For many investors, a debt level below 3 times EBITDA is generally considered more comfortable, meaning the company is approaching a level where debt becomes less attractive from a risk perspective. Another factor affecting the stock is forward guidance. The company projected revenue growth of about 10.5% to 11.5% for 2026. When a company trades at a price-to-earnings ratio near 37 while projecting growth around 10%, some investors consider the valuation demanding relative to its expected growth rate. There is also an additional concern regarding shareholder dilution, as the number of shares outstanding has continued to increase. Furthermore, a securities class action lawsuit has been filed related to shareholders who purchased shares before the company increased its debt. These elements combined create uncertainty around the valuation despite the company's strong historical performance. Hims & Hers experienced a dramatic move in its stock price, rising roughly 40% in a single day. This move followed news that the company resumed its agreement with Novo Nordisk. Previously, Novo Nordisk had ended its relationship with Hims & Hers and initiated legal action, which created significant uncertainty around the partnership. The restoration of the agreement removed concerns about potential legal damages and allows the company to continue selling a Novo Nordisk product. However, the renewed partnership does not necessarily restore the previous profit structure. The margins that Hims & Hers previously earned from Novo Nordisk products are unlikely to return. Pricing pressure increased after a political agreement aimed at lowering the prices of weight loss products, which also led Novo Nordisk to forecast weaker guidance for 2026. Lower pricing generally means lower profit margins for distributors and partners. Despite these challenges, the company reported strong operating results. In the fourth quarter, earnings per share reached 0.08 compared with expectations of 0.03, nearly 3 times higher than forecasts. Revenue increased 28% during the fourth quarter, while full-year revenue grew by 59%. Subscriber numbers increased by 13%. The company also reported cash reserves reaching approximately $929 million. There are indications that capital allocation could include acquisitions, as the company has engaged in significant buybacks and may pursue further expansion. From a valuation perspective, the company still trades at a relatively high multiple, with a price-to-earnings ratio of around 43. The stock previously declined to around 15, which served as a support level in 2024, before rising again to approximately 22 after the recent news. Historically, the stock traded significantly higher, reaching about 47 at one point and even touching around 66 at its peak. This suggests that even after a 40% rise, the stock remains well below previous highs. Rapid single-day increases often bring volatility. When a stock moves 40% in one session, it frequently experiences profit-taking afterward, which can lead to temporary declines before any further upward movement. This type of volatility is common in growth stocks with high valuations and strong news catalysts. Across the broader market environment, there is also ongoing volatility related to energy prices. Oil prices recently experienced sharp fluctuations, at one point rising significantly before falling and later stabilizing around the 90 level after dropping earlier to around 84. These swings in energy markets can influence overall market sentiment because higher oil prices tend to pressure consumers and economic activity. Finally, Drone Shield has attracted attention due to strong price performance. The stock currently trades around $3 and operates as an Australian company. It has fluctuated between levels such as approximately 3 and 3.7. Year-to-date performance shows a gain of about 28%, while the stock has increased roughly 320% over the last 12 months. Revenue growth has been extremely rapid. Reported revenue reached about $216 million, with a growth rate of roughly 276%. The company also announced approximately $21.7 million in signed contracts on February 26th. In addition, the company reports a large pipeline and backlog estimated around $2.3 billion. There is also a software-as-a-service component within its business model. Looking ahead, the outlook for 2026 suggests revenue growth of about 30%. While this represents strong expansion, it is significantly lower than the previous 276% growth rate. The company remains unprofitable, meaning its stock price remains expensive relative to its current earnings profile. Stocks in this category can experience extreme movements, sometimes rising hundreds of percent and then falling dramatically, which explains the high volatility often associated with them. That concludes this overview of the companies and market conditions discussed today. Subscribe to the channel to receive all the latest analysis and analyses about the U.S. stock market.